the Professor Oscar Sistrom. Okay, you guys. Well, it's time for us to get our party started. We are at the top of the hour. Again, thank you guys so very much for coming to our March edition of the ILCA 5-Day Challenge. My name is your Queen Connectress, Miss Marty DeCasa, and I'm going to be your humble hostess this evening. Now, it is my honor and my pleasure to introduce you all to a man that for over 25 years dominated the direct sales industry. His cryptocurrency education is being used by companies and universities worldwide. For over 6 years, he dedicated his life to learning about cryptocurrency and blockchain technology, but he didn't just stop there. He decided to go out, share his information with the masses, and he did this by putting on fun and exciting Bitcoin boot camps nationwide at no cost. He has built thriving platforms and wonderful communities like you see before you now. So without further ado, it is my honor to introduce you all to Mr. Brandon Ivey.
All right. Thank you, Miss Casa, for that introduction. You look lovely as always, and so do all of you guys who are turning on your cameras for us. Thank you. We do much better when we can see you, by the way. You know, even though this is virtual, but we do better when we can see you. So thank you for taking time out of your schedule for being here. First, I want to apologize. I need to do a deep dive into my automated system. We had more than 30 plus people registered today, but I am not confident that my system has directed people in the right area. So I'm getting reports from people who they've registered on the ILCAchallenge.com, and the system is supposed to guide you into now going to our Facebook group where we are streaming live, and then sending you an invitation if you choose to upgrade to VIP to be on this Zoom with us. I'm not sure if, because we've made a lot of changes, if some of those connections are taking place. So I will be doing that after this Zoom tonight to make sure that's fine. But we are streaming live on Facebook, on my page, all of the Facebook groups. And those of you who are VIP members are here with us on our Zoom tonight. Well, we have been at this now for more than 2 years since we launched ILCA. So thank you guys for still being here with us. So some of you were here from the very first 5-day challenge we ever did, all the way to now. And this month is a very exciting time because we are just less than 30 days away from the mythical Bitcoin halving that you've been hearing about over the years, especially if you're new to crypto just a couple of years into this. This is a rare event that only happens every 4 years. And most people don't know what it is. They don't understand it. They don't really get why it's important, how it works. And for us, how do we monetize this? How do we take advantage of this event? So this week is going to be all about the Bitcoin halving. Every night, we're going to have a different topic inside of Bitcoin halving that we're going to be talking about. So welcome everybody again. Welcome those of you on Facebook, and also on our Monday nights. I leave this open to the public. So when we do our Q&A at the end, I will keep the line open, but only the VIP members will be able to ask questions. So before we get into the lesson tonight, we have a special guest speaker. And this is a gentleman that I have a lot of respect for several reasons. One, he is my Morehouse brother, my alma mater, graduated from Morehouse College in the 70s. But then he turned around and came back to the college for decades and taught the next generation of young minds of Morehouse, and is still a professor there today. He's not only been a professor there teaching in the business school, but also he has been the one to integrate and be the first to talk about this new technology, telling the students about Bitcoin and teaching this and getting involved in real estate and decentralized finance. And he's also an expert at taking advantage of the Bitcoin halving. So a lot of you have seen him before, but if you're brand new, I want to introduce you and welcome you to our very own Professor Oscar Sistrom from Morehouse College. Professor, are you there?
Okay, yeah, I got it. Yes, how are you doing? Thanks for the introduction. That's nice. All that means is I'm just getting older. God dog it. Time goes quick before you know it. I started teaching in 1980. Now I woke up and gosh, just 44 years later. Wow. I don't know what.
Well, please share with us before you get into your charts. Tell us about your experience and why you even got into learning about crypto and then wanting to teach it in the first place.
Sure. Well, again, I started teaching at Morehouse. I was 24 years old back in 1980 after graduate school. I figured I'd just teach a few years and then figure out what I wanted to do. But I'm in real estate, so I buy distressed properties and rent them out. And I also started teaching an information systems class, which was business class for, a computer class for business students. Started in about 1985 when the first personal computer showed up on our desk at Morehouse, and I was the only one who knew how to do something with it. So the dean asked me to start a class. And just over the decades, in order to teach that class, I had to continue to stay ahead of the students and learn about the technology, whether it was the computer. I first started teaching the class in the 80s on how to build computers, because I used to build them back in the 70s. I go way back, but a company called Heathkit and used to build them and program them. So I taught students how to do that. Then when the internet came in the 90s, I started teaching students about the internet. I remember when I forced students to get an email address back in the mid-90s, they used to complain about why they need an email address. What do I need all that for? And what do I need to get on the internet? And if I need to read something, I just get a book or, get a newspaper. And so I had to learn and continue. And then eventually, it was 2014, I introduced Bitcoin to my class. I had read about it. At that time, Bitcoin was $68 a coin. And I had a class that I used to teach inside that course called, Is Bitcoin a Scam or will it ever reach $500? And we talked about it. We talked all this stuff. And it's funny, that's 10 years ago. And I had some students even then who owned some Bitcoin. And those students went on and became very wealthy. They got into crypto early. And some of them have come back. And of course, it's changed their life. You could imagine buying Bitcoin for $50, $60, $75 a coin. I used to tell them in that class, and remember, Morehouse is an all-male college. So I would tell them, instead of taking that young lady out on the weekend for movies and dinner, that's going to cost you probably about $50 to $100, depending on where you went. Just have her come over to the house and watch some Netflix or a DVD and cook up some food and take that extra money and buy a Bitcoin. Because I said, see what happens. If you lose it all, so what? But if it hits, you might make some money. And so that's how I kind of got into Bitcoin. But I left it alone after when I retired the first time in 2015. And then in 2017, I saw my first Bitcoin ATM machine. And I saw students lined up. And I walked up to them. I said, what is this? And they said, we're buying Bitcoin. I said, you're buying Bitcoin from an ATM? And they said, yes. And I said, well, how much is a Bitcoin? They said $2,500. I almost fell out. I said, 3 years ago, it was $68. What? And this was 17, just before it took off. So I said, well, I think I need to start watching this. I saw it go from about $2,000, $3,000 all the way up to $19,000. And I couldn't believe it. And then I started doing more research on it, and I saw it collapse all the way down. By February of 19, it was $3,500 a coin. I said, I'm in. I'm getting in because I think this thing might work. There's something called a halving that'll be coming up the next year in 2020. This is, according to the cycle, this is the downside when you start buying. And that's when I started. And I took my time. I took some of those classes. I learned because it's early and it takes time to learn it. You can't learn it that quick. So I took my time in 2019 And after the halving in 2020, in July of 2020, I decided to go all in for it because I knew that the cycle was starting. And I was hooked on it. I did Bitcoin. Now I do Ethereum. I've just started playing around with Solana. So I bought some at about $100. It's about $200 now. That was like a month ago or so. And I'm trying to learn that blockchain. So I know about Bitcoin. I know about Ethereum. Now I'm going to take some time and learn about Solana because I think it has a lot of potential. And there's a lot of big names behind it. So all of these things I'm learning, I take my time. I'm not in a rush. But one of the things that I do is I follow Bitcoin because of this 4-year cycle and the halving that's coming up. It's important that leads the way. They're the big boys. As the big boys, all the other chains kind of follow along. And there's kind of like this system in place. So I'm going to go ahead and start talking. I've got a little presentation to talk about, especially as it relates to this upcoming halving. Now, I've been on here since talking about this since November. We've been talking about this 4-year cycle. So I'm going to kind of real quickly go over some other things in case we have some new people. But this is a Bitcoin versus US dollar chart. It's a weekly chart and it's logarithmic because the best way to see how Bitcoin is really flowing and operating over time is use a logarithmic chart. So you'll see the peaks and valleys of Bitcoin. And then on top of it, I put a 90-day moving average. And if you notice something, see the 90 average time when it's below. Whenever it's below the 90-day average, that's the time for me to load up. So you can see we're just coming out of it now. But early from 22 to early 2023 and into now late 2023 and into 24, we've still been we're just getting above that 90-day average, and we're getting ready to take off again. So let's look at the next slide. One of the things that I talked about is I use this indicator called the pi cycle top and the pi cycle bottom. This is very interesting. Someone figured this out. The pi cycle are two trending lines that every time they cross, they either show the top of the market or the bottom of the market. It has been correct 100% of the time. It's unbelievable. Because what happens is we already know the supply of Bitcoin. It's set. Based on the demand, and human nature means that when it's really hot and the market is overflowing, you get what they call FOMO, fear of missing out. People just buy, they don't care what the price is. And at the other end, when the price drops and gets below that 90-day moving average, people won't buy no matter what. So it's kind of crazy. It's like you'll buy that car when everybody wants that car. You'll pay $100,000 for it. Then they tell you, nah, we don't want that car anymore. And somebody's offering it a discount for $20,000 and you just won't buy it. Because you say, I don't want to buy that car anymore. You follow the crowd. But with Bitcoin, you really have to do the opposite of what everybody else is doing. And that is hard to do. So one of the things I learned is I happen to follow this pi cycle chart. All right. So I follow that. When it tells me to buy, when it tells me to sell, I believe it because it's worked 100% of the time. It's crazy, but it works. It picked the top back in 2021, April, and it picked the bottom back during the late summer of 2022. When everybody said it was going to go lower or everybody said it was going to go higher, the indicator went off. And both times I even said to myself, I can't believe this. I can't believe this is the top at $67,000 back in the April of 21. Everybody was saying it was going to $250,000. I was banking on $250,000 a coin. And then it said, nope, we reached the top at 57. Oh, that's crazy. It can't be. But it was right. It did pop up a little towards October, November of 21 and got to 67. But again, then it collapsed down. So let's go to the next chart. What I decided to do this time, as Bitcoin was down in the dumps, and I'm depressed, it said, well, it's time to learn some more. So what I did is I found that there are 3 phases in the 4-year cycle. And in November, we were off December, January, and February, I talked about each of these phases. And the phases begin when we get to halving. And I know Mr. Ivey is going to talk more about that today. So I'm just going to say when the halving starts, we begin phase 1, which lasts about 18 months. And that's when it goes crazy. So you'll see, this is the upcycle time. I'm telling people now, this is when you really should have been loading up earlier, but now's the time to begin to load up. Even though it's $70,000 and Ethereum is about 3,600, it is time to load up and get ready. After the 18 months, we're going to go through a severe downturn. And people have asked me, well, why did we go through a downturn? Well, again, it's all about the crowd. People are going to get upset as the price begins to drop. A lot of scam artists are going to be exposed. People are going to lose their money because, you know, they tried to invest too much into some of these shady deals. The companies are going to collapse. Everybody says Bitcoin's going to go down to 0. And nobody wants to buy it anymore. And it'll go down usually about 60 or 70%. And then it'll sit there. And after a year of that, it'll begin to track back up over the next year and a half, back up to the next halving. It's just, I mean, it happens every time. So let's talk about it. Let's go next chart. This next chart shows those 3 phases that I talk about with the blue lines indicating the halving. Notice you have a halving. There's phase 1 where it goes up, phase 2 where it comes down, and phase 2 where it kind of gets back to close to the all-time high. It happens every time. It happened back in 2014, 16, 20. And guess what? It's happening now. What's interesting, which we'll talk in a minute, this is the first time we've had a halving where we've gone to an all-time high before we reached the halving. If you look at those charts before, we never got to the all-time high until after the halving. This is the first time we've had one before the halving. I don't know what that means. I have some ideas what it means. But of course, we don't know. But I'm very excited to see what's going to happen. But you can see phase 1 is coming. It's the halving, and it's for the next 18 months. It's going to be probably until, let's see, what's that, October of 25. It's going to be a wild time. So now's the time to kind of learn about it and get in and enjoy and learn about this. But don't take it too far. When that pi cycle chart, and by the way, you can get that pi cycle indicator. Basically, if you go to any of those charting services like TradingView, you can get it on there at no cost. It's free. You just add it as an indicator to your chart, and it'll run. It'll tell you when the indicator's on. So there's no charge for this pi cycle top or bottom indicator. But again, you can get it and begin to follow it and learn it. Let's go to the next chart. All right, let's talk about these different cycles, just so that you can kind of get used to this. Remember, I was saying that I've chart the whole let's say 48 months, the 4-year cycle. And the first 18 months is when we really see it take off. So this is the first cycle that we had. This is the cycle that started in August of 2012. And if you notice, I had put down at the bottom, the highest positive monthly change was over 470% in 1 month. Wow. The lowest was about, I think it's about 38%. So it was just going crazy. Out of those 18 months, we only had 5 down months. They weren't that bad, but some of the up months were unbelievable. And that's because it's early. I also highlighted the yellow line represents the actual pi cycle month. I mean, not pi cycle month, the actual halving month. And then I included 3 months before that. So notice 3 months before that, August of 2012, Bitcoin was $9.38. Then we went into the halving at $12.80. And by the end of the halving, we were at over $200. That's a really nice return. And in between, on April 13th and December 13th, we had 2 pi cycle tops. We had one, and then you see how it corrected for a couple of months, and then we ran and had another one, and then it stopped. So you could have basically sold or figured out whatever your strategy was at any one of those pi cycle tops, and you would have done well. Right? Let's go to the next one. The next one is that second cycle. And that's the one that I really remember because I had been teaching the class in 2014 about Bitcoin. And then in July of 2016 was the halving. And that's kind of then when I reached out to those students. Well, I mean, I saw that ATM machine in 2017, and Bitcoin was somewhere around that 200. It's probably just about that July of 2017. I saw Bitcoin get about $2,000, and I just couldn't believe what I saw. And then it took off, and eventually, again, reached the top in 18 months. We had that pi cycle top actually occurred on that 18th month, which was right on target. So let's go to the third cycle. Now, the third cycle is the one I participated in, but it started in May of 2020. And I had gotten in February of 2019 at 3,500. So I was in pretty good shape leading up into May of 2020. And if you remember, of course, that's the COVID year. And in a way, that was really a great year because everybody got some money from the government. And I made my 3 daughters put their PPP money into crypto. And boy, they were upset about it. But right now they're happy because they can keep chipping off that money as it keeps growing to do some things that they want to do. So I have 2 daughters. I don't know what the youngest one did, but the other 2 still have their wallet. They still have crypto. They still have equity. And they probably spent their PPP money 2 or 3 times over. And, you know, it's really interesting. So I did the same thing. I got in, and then it went through the roof really early. The pi cycle chart went off early in April of 2021. I'll never forget it. It went off at 57,000, and I just knew it was going to 250,000. And I just couldn't believe it. But I said to myself, it's been 100% correct. So I did sell some to get out of it, and you know, paid some bills off, and you know, got my finances straight. And then I ended up kind of staying there and going through the second cycle that happened, that little bubble that occurred in October and November, where it went up into what, 67,000. And then I thought, well, we're gonna have a double top, and it's gonna go to 200,000, and it never did. And I sold some of it. And like I said earlier, I used Bitcoin to buy some rental property by using Bitcoin as collateral. That's another story I'll talk about one day. But as I said earlier, I'm into real estate, so I'm merging crypto and Bitcoin and Ethereum into real estate. And that tokenization of real estate that sometimes Mr. Ivey talks about during this 5-day challenge. So I'm kind of into that too, but from the Bitcoin standpoint, I understand. So that was a good year. It didn't do what I thought it was going to do, right? Everybody thought it was going to at least six figures, 200,000, 300,000, $1 million, all the kind. I was just counting the money. I was like, man, I'm gonna make 100x on my money. I'm gonna be a multi-millionaire, and I'm moving down to Barbados, and I'm just gonna take it easy and relax. It didn't work out, and I stayed in too long. So I said, this time I'm gonna learn more and study more. So this time I'm ready. If I'm gonna make a mistake, it's because I got out maybe a little bit too early, but I'm not gonna make a mistake by staying in late. So I'm gonna stay in with these phases and that I've come up with, and the 4-year cycle, pi cycle chart, and the pi cycle bottom, and just keep it going. Let's chart here. Now we're coming up on April 2024. And I kind of put the previous 3 months. And the amazing thing is we've already surpassed the all-time high. That has never happened before. I don't know what that is. I kind of believe what some people are saying, and that is now allows a lot of my friends, especially boomers, to go back to their retirement accounts, go back to their financial advisor, and they can now invest in Bitcoin without needing a digital wallet, without having to learn about Coinbase, without having to use compound.finance or any of those other things that I had to learn how to do. And, your addresses and all that kind of stuff. They just call their financial advisor and say, I need some BlackRock ETFs. And that's what they do. Or they invest in MicroStrategies, which is kind of like a company that has bought so much Bitcoin, they act like they're like a Bitcoin firm. So you can buy MicroStrategies, and it's kind of like an ETF wannabe. But now that you can do ETFs, BlackRock and the rest of them are just buying up everything, and there's only so much out there. And when the halving occurs next month, that means the amount of Bitcoin that will be produced is cut in half. So think about it. If the demand goes up and these people, they start seeing Bitcoin going through the roof, they're going to go out and tell their financial advisor, buy more, buy more. And it's just going to drive the price up. That pi cycle indicator is going to kick off. And I know I'm not going to want to sell. I know I'm going to be crying. But this time I'm going to sell, because eventually it's going to come back down after 18 months, probably late 2025. We'll see what happens. And at that point, watch how many people try and unload their Bitcoin through their ETF. Think about it. They don't know about the cycle or anything. They're just going to see the Bitcoin go down, BTC go down, and they're going to call their financial advisor, say, dump it, get my money. I don't want to lose money. Let me take my profit. And it's just going to collapse off everybody's going to talk about Bitcoin's going to go to $1 million. The ETF means that it'll never go down again. Then the pi cycle indicator is going to kick off and say we're at the top, and it's going to go down 60%, 70%, bam. And if you hang in there, I mean, you can hang through it if you want or sell. There's a lot of different strategies. And that's why I think it's important to learn and take these classes to figure out the strategy that suits you the best. And so I'm excited about this halving. I'm loading up, getting ready again. And this time, if this is your first cycle, take your time, enjoy it. But when it's time to sell, sell. Or if you're just going to hang in there and ride it through, just don't worry about the price. Ride it through, down and back up. Because I'm gonna say one last thing, I'm finished. 4 years ago, in March of 2020, Bitcoin was around $8,000 or $9,000. Where can you invest $8,000 or $9,000 and 4 years later have $70,000? Where? Now it went all the way up to 67, all the way back down to 19, and all the way back to 70. So a lot of people say, oh, Bitcoin it's just got too much volatility. No, you have to compare 4 years to 4 years. If you compare 4 years to 4 years, There's no there's no reason why you shouldn't be in Bitcoin. When you buy it, it's there to hold. So I'm holding Bitcoin for my grandchildren. Okay? My children and grandchildren. So I'm not trying to sell it next week. I'm gonna buy it every time it goes down and wait for it to go up and enjoy it, and then down and up. But over time, it's going to eventually mediate out, just like other stocks have done. It's not going to be this volatile forever. So now's the time to make those 100, 200% annual returns. And I'll stop it with that.
All right, all right. Thank you, Professor Sistrunk, for that information, guys. I mean, he is right about that. If you just hold from 4 year to 4 year, you have no choice but to have success. It's a guarantee, and the numbers show. And there's always a cycle. I say that this is the year of accumulation. The only way you lose is when you sell. That's the only way. But education is key. Education is everything. So, Professor, if you can stick around for at the end when we go through Q&A, if anybody has any questions that they'll be able to ask you, all of our VIP members. So for everybody else, now we're going to get into, so let's bring it back to the basics. We even have some people even on Facebook like, wow, this is great information, but like Anthony says, I'm a third grader in a doctorate course. Well, I wrote my courses in a way that my mom can understand. We want to make sure that you know what this means and how it can work for you, starting from the basics. So normally on night one, we go back to what is cryptocurrency? And then we go into what is blockchain technology? What does it mean? What's the white paper? What are wallets? But for this week, it's all about Bitcoin halving. But I'm going to be as simplistic as we possibly can. So let's go into this lesson. And tomorrow night's lesson, we're going to talk about investors and strategies in this. But let's talk about what is Bitcoin halving. Well, the available supply of fiat currencies rises and falls under the watchful eyes of national central banks, but the total supply of Bitcoin is fixed and immutable. There will only ever be 21 million Bitcoin. That is it. Unlike your fiat money, the government can just print more of this whenever they want to. And whenever they do that, what happens to the value of the money you already have? The value drops. But if there's only 21 million Bitcoin, and we've got 50, I think it's up to 50, no, 70 something now, 70 plus million millionaires and billionaires in the world today, out of 8 billion people. They all can afford to buy a Bitcoin without blinking an eye right now. But there's not enough Bitcoin to go around. So when the demand is higher than the supply, what happens to the value? It goes up. So already right now, 19 million Bitcoins have already been mined, leaving under 2 million Bitcoin left to be mined. The Bitcoin protocol periodically reduces the number of new coins earned by miners in a process called halving. One of the most important features of Bitcoin is the limited supply and issuance mechanism. Halving's role in controlling the supply of new Bitcoins is one of the reasons the world's most popular crypto is seen as a store of value that's more akin to gold than a fiat currency. So for those of you who attended our 5-day challenge last month, we went over in detail what is mining as far as Bitcoin, how the blockchain is made. And so this is a result after every block, the countdown clock happens. And 4 years later, the amount of rewards that the miners are getting for creating the blockchain is cut in half. And one of our lessons this week is going to be like, what is the impact on miners? So you know what that means. So to understand the Bitcoin halving, we must first understand the theory behind its supply. The inventor of Bitcoin, Satoshi Nakamoto, believed that scarcity could create value where there was none before. After all, there's only one Mona Lisa, only so many Picassos, a limited supply of gold on Earth. If you own gold, are you excited when you get word that a new gold mine has been discovered, a new gold vein has been found? No, because that just means more gold is going to flood into the market. You want it to be limited. The more limited, the more valuable. Bitcoin was revolutionary in that it could, for the first time, make a digital product scarce. There will only ever be 21 million Bitcoin. The idea of limiting Bitcoin supply stands in market opposition to how fiat currencies such as the US dollar works. Fiat currencies initially were created with firm rules to create $1. The US government needed to have in reserve a certain amount of gold. This was known as the gold standard. How many of you believe that we are on the gold standard? No, I don't want to embarrass people. Ask that question. How many of you, type me in the chat box if you're aware that we're no longer on the gold standard? Type me in the chat box if you are aware. And I say that because my brother, and I use him as an example, he's Dr. Devin Ivey. He's got a doctorate degree. He was born in 1978. And when I was trying to explain to him what Bitcoin and blockchain was, he did not know that we were no longer on the gold standard. And we got off the gold standard before he was even born. 1971, we got off the gold standard. So many people that's running around using and working hard for this money, they don't even know what it represents and how it works. Over time, these rules eroded as modernizing economies during bouts of extreme financial uncertainty like the Great Depression, World War II, printed more money to help stimulate struggling economies. So think about it. The Great Depression. What happened? How did we get out of it? We printed more money. World War II. How did the US become the US dollar, the world reserve currency? We printed more money that the other countries were using. So is it smart for other countries today to try to stack up as much US dollar as they can when the US government can just print more of it? What did we learn in crypto talk this morning? What is El Salvador doing? Because they're doing dollar cost averaging. Right now, they have a thing where they are buying 1 Bitcoin a month, regardless of the price. They already bought a bulk of it years ago, but they have a standard order of buying 1 Bitcoin a month until the price is priced out that they can afford to do, which I think they're going to continue to do it anyway. Because El Salvador, the way they're moving, they're going to be one of the world's richest countries in the future. You might think, what? El Salvador? Yes. Not today, but in the future, they're positioning themselves to be one of the richest countries on the planet. So over time, these rules evolved into today's system in which governments can, broadly speaking, print money whenever they like. What happened after the 2008 financial collapse? We had businesses too big to fail, and they used taxpayer money to bail out banks and businesses that got us into the problem in the first place. How many of you were bailed out? Here's how you got screwed. They used your money to bail out these businesses, printed more money that made the money you still had left worth less. Then this happened again after COVID. Do you realize that more than, I think, 60 to 70% of money in circulation was printed after COVID because of the stimulus? Why do we have rapid inflation? Why are things so expensive at the grocery store? Because of that, the government printed more money. They printed their way out. But that can't last long doing that. Satoshi Nakamoto believed that this devaluation of fiat money could have disastrous effects. And so with code, prevented any single party from being able to create more Bitcoin. So there is no private World Bank or the Federal Reserve or a president or government that can say, let's print more Bitcoin. Oh, can happen. Embedded in the Bitcoin code is a hard cap of 21 million coins. New Bitcoin is released through mining as block rewards. Miners do the work of maintaining and securing the Bitcoin ledger and are rewarded with newly minted Bitcoin. However, about every 4 years, the reward for mining is halved, and each halving reduces the rate at which new Bitcoin enters the supply, a process that likely will last until 2140. So if you ask, when will the last Bitcoin be mined? Because of halving, the last one, you say, well, if we've already mined 19 million, we should run out of mining Bitcoin, what, in the next decade or so? No, because the halving is taking place every 4 years on average. So the last Bitcoin will be mined in the year 2140. So a brief history. 2009, Bitcoin mining rewards start at 50 Bitcoin per block. In 2012, the first Bitcoin halving reduces mining rewards to 25 Bitcoin. Now, what does that mean for you brand new people? Like what Steven said, he's a third grader. What does that mean? Well, how is Bitcoin created in the first place? Because it's not created out of thin air like Donald Trump said a couple of years ago. It's not just made up. It is a process that takes manpower, money, time, equipment, and electricity. I think the average, it costs, I think, $7,500 now for one Bitcoin to be mined. I think it's somewhere around that's the cost. So there's a cost to this. And it's not that the miners are building and creating Bitcoin. What they're doing is they are building the blockchain. And the blockchain is a record of transactions. So how do you incentivize somebody to use their time and equipment? Remember, this is not a government. This is not a business. It's open source. Anybody can do this. How do you incentivize somebody to create the system where all these transactions are being recorded, the ledger? Well, you need to reward them. And the reward is Bitcoin. So the myth is people are creating Bitcoin. No, people are creating the blockchain. The reward for creating the blockchain is the release of Bitcoin into the system. So in 2009, it was 50 Bitcoin per block. First halving in 2012, 25 Bitcoin. The next halving, 2016, 12.5 Bitcoin. Now you might say, but wait a minute. That's not fair. You're doing the same amount of work, but I'm getting less Bitcoin. Actually, it's even more difficult because as time goes on, it's more difficult to mine the Bitcoin. But you're getting less? Yeah. But what was the price of Bitcoin in 2009? What was the price of Bitcoin in 2012? What was the price of Bitcoin in 2016? The price kept going up. So even though that the reward is less Bitcoin, the value is worth so much more. How many of you guys have seen me play these video recently of that guy in ultimate shock that Bitcoin hit like $111 a coin, all-time high, and he couldn't believe it. He's like, I got 20,000 Bitcoin and it's worth $111 a piece. I'm rich. What would you do today if Bitcoin was $111 a coin? Would you buy as much as you possibly can, knowing what happened? What if somebody could go back in time and tell that kid, don't sell your Bitcoin because it reached an all-time high in 2024 of $74,000 a coin, and you're excited about it hitting 111 bucks. So if Bitcoin in 2009 was worth pennies, 50 Bitcoin back then, in 2016, Bitcoin got up to $870 a coin. This is the year I bought Bitcoin for the very first time. So 12 and a half Bitcoin at $870 a coin is worth a whole lot more than 50 Bitcoin worth pennies in 2009. 2020, the first Bitcoin halving I participated in, like Professor Sistrunk. It was the third Bitcoin halving. That's going to go down in history Your grandchildren, great grandchildren gonna say, yeah, my great granddad was there when Bitcoin, it had its fourth halving. 2020, the third halving, mining rewards dropped to 6.25 Bitcoin per coin. Now, at this point, Bitcoin had reached an all-time high of $20,000. But then that was in 2017. By 2020, it had dropped around the $8,000, $9,000 range. And then after the halving, it shot up again to a new all-time high in 2021 of $69,000 a coin. 2024, where we are right now, less than 30 days from now, the mining rewards is going to drop to 3.125 Bitcoin a piece. Now you might say that's a big difference from 50 in 2009. Yeah, but this halving cycle is predicted for Bitcoin to reach anywhere between 250,000 to $500,000 a coin. When? And that's the big question. If you were paying attention, Professor Sistrunk gave you a timeline of when he believes that I am on the same track with him. I believe that the next all-time high should be reached around October 2025. Now, we do have an unknown that's taken place. The BlackRock ETF that hit 2 months ago. This has never happened before, and it threw the market off. Why? Well, as Professor Sistrunk said, institutional investors, people who don't have time to want to learn about crypto education, who don't want to learn about having a Bitcoin wallet, about having what hash means, about private keys, about any of that stuff, can now just call their agent up over at BlackRock and say, I want a position, and this is how much I want to spend on Bitcoin. Now, why is BlackRock doing it? Because when you do it through them, you're not actually owning the Bitcoin. BlackRock owns the Bitcoin, and they have been gobbling up more than 5,000 Bitcoin a day. You've got El Salvador only doing 1 Bitcoin a month. These companies are doing thousands of Bitcoin a day. They're gobbling up the market because they know what's coming. So 3.125 Bitcoin is the next halving reward after next month. 2140, the 64th and last halving occurs, and no new Bitcoin are created. Well, if there's no new Bitcoin that's going to be created, what's going to incentivize the miners to continue to build the blockchain? Finding reward. Well, backtrack that. Hash rewards, meaning transaction fees, is what they're going to be collecting their rewards for instead of Bitcoin. So what's so special? If a person, group, or government is trusted to set up the money supply, they must also be trusted not to mess with it. Bitcoin is supposed to be decentralized and trustless. No one person, individual, group, or entity is in control. No one to trust. What did President Bush say after 2008? If you guys remember or was following politics at that time, after the greatest recession since the Great Depression happened, he did a famous speech because the people were panicking and the rest of the world was panicking. And he said, calm down. Trust us. We got this. This is only going to work if you trust the government. And that calmed down the markets after he gave that speech. But can we really trust an individual? Can we trust the government or a group to do what's in our best interest? I believe on the contrary. I don't need to listen to what you say. I follow what you've done and what you've done to our financial system over the past 100 years. I don't trust you. But what if there's a system that you don't have to trust a person or an individual? Can you trust math? You can't lie in math. 2 + 2 will always be 4. There are no alternative facts about that. Even though I'd say, there's a 6, And if somebody is standing looking at a 6, somebody on the opposite of that sees a 9. Not when you're dealing with math here. 2 plus 2 will always be 4. All right? You can trust math. By writing a total supply, well, since Bitcoin is not controlled by any one person or group, there must be strict rules about how much Bitcoin is created and how it's released. By writing a total supply and halving event into the Bitcoin code, the monetary system of Bitcoin is essentially set in stone. It's like I'm pulling up old Mesopotamia tablets. It's set in stone. It can't be erased. You might try to chisel it off, but it's set in stone. This hard cap means Bitcoin is a kind of hard money like gold, the supply of which is practically impossible to change. So Bitcoin miners. Bitcoin halving is when the reward for Bitcoin mining is cut in half. Halving takes place every 4 years. The halving policy was written into Bitcoin's mining algorithm to counteract inflation by maintaining scarcity. In theory, the reduction in the pace of Bitcoin issuance means that the price will increase if demand remains the same. But that's just if it remains the same. What we're finding is demand is not remaining the same. Demand is only getting higher, which speeds this up. At the moment, Bitcoin has an inflation rate of less than 2%, which will decrease with further halvings. Bitcoin's production scarcity is what defines its finiteness. And when reward goes down, supply is constrained. Increasing demand at a time when supply is constrained has a positive impact on the price, which can make Bitcoin alluring to investors. So here's this perfect storm of what's happened over the last few months. We've got a much more educated crypto community out there of holders. 4 to 8 years ago, you had a whole bunch of people who owned Bitcoin and crypto that didn't understand it. They didn't know what it was. So they were uneducated holders. Now we have a far higher educated group of people owning Bitcoin, and they're not selling. They're like, wait. I'm not stupid. I see what's happened in the past. I'm not trying to sell my Bitcoin. So you've got a group that's not selling. Then you've got BlackRock ETF come in, and then BlackRock, Fidelity, Grayscale, Franklin Templeton, all of these agencies are now gobbling up Bitcoin that's available on the market. So you have a less supply that's available. And what does that do? Pushes the price up higher at the same time as we're going into the halving event, which is now going to decrease the amount of new Bitcoin entering the market. That is a perfect storm of a rocket ship taking off. You'll hear me say this later this week. I personally believe, and this is I always give a disclaimer, I'm not a licensed financial advisor. I personally believe we only have 6 years left. 6 years left for the average person to take advantage of this space and change their family tree. 6 years. Will there still be opportunity after that? Yes, just not as great as now. Because here's what's going to happen. After this halving, and we see Bitcoin shoot up to a new all-time high in the 6-figure range in 2025, you're going to see it come down again. When that happens, that's going to be one of the last times that Bitcoin is going to be affordable for the average person, meaning it's going to be at the range of being able to buy a car. See, before that, it was, a couple $1,000s. But when Bitcoin corrects again, after it goes to the 6-figure range, it'll correct back down to maybe the lowest, maybe 50,000, maybe as low as 40,000. The next correction. And then you're going to go into the 2028 halving. and then a new all-time high in 2029, where we're now going to be looking at in north of $500,000 a coin. When that correction happens, it's still going to be the price of a house. $200,000 will be the low. 2029, 2030. After that, we won't be talking in terms of Bitcoin anymore. We'll be talking in terms of Satoshis. How many Satoshis do you have? 0.0005 Satoshis might be worth $40,000. How many Satoshis do you have? I say it, I've been saying it since 2017. If you own just a quarter of a Bitcoin today and hold on to it and don't sell, you will be in the top 1% of all asset holders in the world. So if Bitcoin's at $70,000, $69,000, you need to own about $15,000 to $20,000 worth right now and never sell it. Leave it to your grandkids, because that is going to put you in the top 1 percentile of asset holders on the planet in the future. A decentralized network of validators verify all Bitcoin transactions in a process called mining. They are paid 6.25 Bitcoin when they are the first to use complex math to add a group of transactions to the Bitcoin blockchain as part of its proof of work mechanism. At the current price of 6.25 Bitcoin is worth around, well, when I wrote this, the price is different. I think at the time I wrote this, Bitcoin was at what, $30,000 or so a coin. Now this is much higher, because Bitcoin's close to $70,000 a coin now. I just wrote this a couple months ago. Those blocks of transactions are added roughly every 10 minutes. And the Bitcoin code dictates that the reward for miners is reduced by half after every 210,000 blocks are created. So when people say, well, how do you know it's every 4 years? Well, it's not every 4 years. It's after every 210,000 blocks are created. It takes 10 minutes for each block to be created. So you do the countdown, it comes out to about takes 4 years for this to happen. So it happens like running for voting for president every 4 years. That happens every 4 years, accompanied by heightened Bitcoin price volatility. Bitcoin miners invest money in specialized mining hardware, as well as the electricity required to run their rigs. The cost of this is offset by their mining rewards, but what happens when their rewards are halved? Since the halving reduces rewards, the incentive for miners to work on the Bitcoin network is also reduced, leading to fewer miners and less security for the network. For this reason, once the last Bitcoin is mined, miners will, assuming there haven't been any major changes to the Bitcoin protocol, receive rewards in the form of transaction fees for maintaining the network. But hold up, whoa, Brandon, what did you just say? Assuming there haven't been any major changes, how can the Bitcoin protocol be changed if there's no single person owning it? Very good question. That is because it is a decentralized, autonomous network. Everybody who's a miner can vote on which direction that Bitcoin will be headed in. And if they cannot agree, then forks take place. What does that mean? Bitcoin splits off and you have a new token that starts going in a different direction with different miners on that network. This has happened twice with Bitcoin. Well, technically 3 or 4 times, but officially, like, because you had Bitcoin Gold, but then you had Ethereum. But the real fork, and a fork just means the coin shares this, they share the same history up to a certain point, was Bitcoin SV. And you had a gentleman by the name of Craig Wright, who is self-proclaimed Satoshi Nakamoto, By the way, the court in Sweden, I think it's Sweden or in UK, just came down on him and said he is not Satoshi Nakamoto, ruled against him. That just happened last week. But you have a group of miners that can't agree with each other, and then you have forks that take place. So that's how that can happen, how the Bitcoin protocol can change. At present, transaction fees make up only a small proportion of a miner's revenues. Miners currently mint around 900 Bitcoin, about $34.3 million a day, but earn between 60 and 100 Bitcoin, 2.2 million to 3.8 million in daily transaction fees. That means transaction fees currently make up as little as 6.4% of a miner's revenue. But in 2140, that'll shoot up to 100%. Transaction fees will likely grow in an inverse correlation to and as a compensation for the diminishing mining returns. So as the least amount of Bitcoin is coming in as a reward, the higher the fees that the miners are going to start to make. It's also possible that the reward mechanism for Bitcoin could change before the final block is mined. Bitcoin currently runs on a proof-of-work consensus mechanism, which has attracted criticism from the likes of Tesla CEO Elon Musk for its high energy consumption. So when is the next Bitcoin halving? Well, the Bitcoin algorithm dictates halving happens based on a certain creation of blocks. Nobody knows exactly when the next halving will occur, but experts point to May 2024 as an anticipated date. Now, that has changed because I wrote this a couple of months ago that now they know as we get closer, they're able to pinpoint even more. It's going to happen in April. So that will be almost exactly 4 years since the last one. The somewhat predictable nature of Bitcoin halvings was designed so that it's not a major shock to the network. But that doesn't mean there won't be a trading frenzy surrounding Bitcoin's next halving. Historically, there is a lot of Bitcoin price volatility leading up to and after a halving event. However, the price of Bitcoin typically ends up significantly higher a few months after. But this year, for the first time ever, we saw Bitcoin reach a high right before the halving. So we're literally in uncharted territory right now. Nobody can accurately predict what's going to happen next. All we can do is prepare for what is possible. While there are many other factors influencing Bitcoin's price, it does seem that halving events are generally bullish for the crypto after initial volatility eases. Investors should be cautious about the next Bitcoin halving. Although scarcity can drive price appreciation, reduced mining activity could cause the price to level off. The key point for investors to consider, however, isn't the specific dates of halving events, but to focus on the growth of the network overall. As long as the network continues to grow, the likelihood of Bitcoin fulfilling its potential as a global store of value increases. It just hit me. I wrote this before BlackRock ETF was approved. Interesting. So the first half, Bitcoin halving. The first Bitcoin halving occurred in November 2012. The next halving was in July 2016. And the most recent halving was in May 2020. So you notice it's not always May or April of every year. First year it was November. The next halving was July. The next halving was 2020 was in May. This one is in April. So that means probably the twin might happen around February or March of 2028. The reward or subsidy for mining started out at 50 BTC per block when Bitcoin was released in 2009. The amount drops in half each time a new halving takes place. For instance, after the first halving, the reward for Bitcoin mining dropped to 25 Bitcoin per block. The last halving will occur in 2140. At that point, there will be 21 million Bitcoin in circulation, and no more coins will be created. From there, miners will just be paid with transaction fees. Now, even though technically this says 21 million in circulation, a lot of these coins have been lost forever. Most of them in the early days of Bitcoin, because people didn't understand what Bitcoin was. They didn't. They had it on their old hard drives, and they got rid of their computers or wiped the hard drive, or people forgot their wallet keys. So really, it should be about 9 to 10 million Bitcoin in actual Bitcoin will be in circulation. There is talk, I'll let you guys know this, in the mining community. Now, not any time in our generation, but they're talking about the next generation, 40, 50 years from now, that they want to bring up the possibility of creating more Bitcoin and adding another 10 million to this supply to move it to 31 million to make up for the Bitcoin that has been lost. Now, that was an idea that has been shot down by 99% of all the miners today. Why would they shoot that down? Because they're the ones that get their hands on Bitcoin first. Why would they want another 10 million to be flooding the market? Because that means the value of Bitcoin that they currently have will drop. That they'd be shooting themselves in the foot. But they're talking 40 to 50 years from now, that the sentiment may change. So that is a possibility that could happen. Miners may shift transaction processing power away from BTC once the next halving takes place, as they seek more transaction fees elsewhere to make up for lost Bitcoin revenue. So we'll talk about this later in the week when I talk about the impact of miners. But what usually happens is, as soon as the halving takes place, a lot of miners are losing money. So unless they've stacked up enough for the next 6 months to a year, a lot of them go out of business, or they merge with larger mining groups and organizations, and to at least stay up, keep themselves afloat until the value of Bitcoin rises higher to compensate for the loss of that they're having for doing the same amount of work. Fewer miners would mean a less secure network, experts say. On the other hand, while the halving reduces the reward for miners, it equally lowers the supply of new coins without reducing the demand. If the economic theory holds true, which historically for Bitcoin it has, Bitcoin prices should increase dramatically in response to the supply shock. Although there is still debate on whether the historical price movement around each halving was a direct product of the halving. Higher prices would be an incentive for miners to keep processing Bitcoin transactions. Let me speak to those of you who are a little bit more advanced investors. What you need to watch out for is not about just watching the charts. You've got to see what's going on in the world with geopolitics and businesses. And now that we have institutional investors coming into this space and they know what they're doing, they can manipulate this space. It's still small enough. Remember, the entire big crypto market cap, have we crossed 3 trillion yet? I had to look at that again. Well, more than $2 trillion is the entire crypto market cap. BlackRock alone has direct influence or power over 10 trillion and indirect power over 20 trillion. How? Because when they move, their competitors move as well. They have the power to still manipulate this. So at any given time, they can decide, yeah, let's flood the market with 50,000 Bitcoin and drag the price down. We saw institutional investors do this before. On December 17th, 2017, the exact date Bitcoin hit its all-time high after that 2016 halving. The CBOE, Chicago Board Mercantile Exchange, went live in Chicago for futures trading in Bitcoin. Everybody thought Bitcoin was going to continue to go to the moon because the rich people are in it now. The opposite happened. The rich people said to themselves, wait a minute, you mean to tell me retail investors, mom and pops, got Bitcoin up to $20,000 a coin without us? We're not buying this at $20,000 a coin. They manipulated the market down, all the way back down to $3,000 a coin. Then they bought it up. This is my own opinion. I believe they're going to do this again. They're not going to buy at an all-time high. They're going to manipulate the market, make it drop all the way down, make all the scary people that's not educated in crypto think that they're losing all their money. You're going to see the news talking about crypto is crashing. We told you it was going to happen. It's tulip bulbs. You're going to hear Peter Schiff saying, I told you guys to get gold, that this crypto thing's going to crash, even though the price is only at 40,000. People are going to get scared, and all the rich people are going to buy it all up. That's my own opinion. The debate over whether Bitcoin halvings affect the cryptocurrency's price or whether they're already priced in continues to rage. According to the laws of supply and demand, the dwindling Bitcoin supply should increase demand for Bitcoin and would presumably push up prices. One theory, known as the stock-to-flow model, calculates a ratio based on the current supply of Bitcoin and how much is entering circulation, with each halving, unsurprisingly, having an impact on that ratio. However, others have disputed the underlying assumptions upon which the theory is based. Historically, after previous halving events, the price of Bitcoin has increased, but not immediately, and other factors have played a part. At the time of the June 2016 halving, the price of Bitcoin was around $660. Following the halving, Bitcoin continued to trade horizontally until the end of the month before falling as low as $533 in August. But then Bitcoin's price shot up to its then all-time high of over $20,000 by the end of 2017, an increase of 2,916%. Where else do you see that? You get that at a bank in your savings account, in your 401k, in your IRA and all that stuff? 2,000. And this is after people still said, oh, Bitcoin, it's a scam. 2,916% increase. Similarly, in the wake of the 2020 halving, Bitcoin's price increased from just over $9,000 to over $27,000 by the end of the year. But in the 2 months following the halving, the price didn't break $10,000. Now, there were other things that happened during that time, like Terra Luna that collapsed and caused a price collapse in the entire crypto space. So it's also important to note that other factors influenced Bitcoin's 2020 bull run, most notably growing institutional investment from the likes of MicroStrategy and PayPal's decision to enable its users to buy and hold Bitcoin. Now, why are the halvings occurring less than every 4 years? The Bitcoin mining algorithm is set with a target of finding new blocks once every 10 minutes. Some blocks take more than 10 minutes, some take less. This can decrease or increase the amount of time it takes to reach the next halving goal. For example, if blocks consecutively average 9.66 minutes to mine, it would take about 1,409 days to mine the 210,000 blocks required. So 4 years is 1,461 days, including 1 day for a leap year. So what happens when there are no more Bitcoins left to mine? It is often thought that in 2140, the last Bitcoin will be mined. However, if the reward is halved every 210,000 blocks, it will get smaller and smaller until 1 Satoshi is the reward. 1 Satoshi is 0.000000001 Bitcoin. A Satoshi is the lowest denomination of Bitcoin and cannot be halved. So 1 Satoshi may remain as the reward until the total amount of Bitcoin equals 21 million. There could be millions of Satoshi rewarded after 2140. So the bottom line, a Bitcoin halving cuts the rate at which new Bitcoins are released into circulation in half. The reward system is expected to continue until the year 2140, when the proposed limit of 21 million Bitcoin is theoretically reached. In 2009, the reward for each block in the chain mined was 50 Bitcoins. After the first halving, it was 25, and then 12.5, and then it became 6.25 Bitcoins per block as of May 11, 2020. And next month, that's going to be down to 3.125. Bitcoin halving has major implications for its network. For miners, the halving event may result in consolidation in their ranks as individual miners and small outfits drop out of the mining ecosystem or are taken over by larger players. Like I said, the average person can't mine for Bitcoin today. So as a disclaimer, this information is intended for educational purposes and training purposes only, should not be construed as investment advice. As with all financial decisions, you should contact your licensed financial advisor before investing in any financial instrument. And that, ladies and gentlemen, brings us to the end of our lesson tonight. Tomorrow night, we will be doing this lesson, Bitcoin halving investor perspectives, and we have another guest speaker, which will be Mr. Herschel Crow, will be up tomorrow night. So let me ask you guys a question. If you have a better understanding, it doesn't have to be a complete or full understanding, but a better understanding of what the Bitcoin halving is all about, type me in the chat box if you have a better understanding. What we're going to be doing now is I am keeping the live stream on Facebook, but we're going to be moving into the Q&A section now. And the only ones who can ask questions are those of you who are VIPs, the people you see on Zoom. There's no such thing as a stupid question. I'm going to bring up Ms. Casa to give you guys the rules on what's going to happen next. But we send an invitation to all of you on Facebook to become VIP members with us in our ILCA community. The cost is a one-time cost of $97. That one-time cost gets you VIP access not only to this 5-day challenge, but every 5-day challenge I do for the rest of this year. Because we do it once a month for just $97. So Ms. Casa, if you can put in the, yeah, there is a link. Yeah, so if you guys want to be upgrade, and again, I apologize, our automated system, I don't think is running the way it's supposed to right now. So because of that, this week, I will be streaming the challenge on all the Facebook groups, not just my 5-day challenge group. However, I will not be streaming live the Q&A. I'm only going to be doing that tonight. So if you want to be a part of the Q&A and be able to ask questions and even see, some people are shy, they don't want to ask questions, but you like listening to the questions other people ask, you got to be on the VIP side. Got to be on the VIP side. If I was to choose a Bitcoin-only wallet, blockchain, or is it bitcoin.com? I think it's bitcoin.com or blockchain.com. That's actually connected to the Bitcoin blockchain. But I always say I would suggest Exodus. Oh, I see what you're saying. You're saying like Dark Fusion. That's advanced. We're not there just yet. SCL, yeah, SCL's the only one. And that actually is kind of out right now, but that ecosystem will be launching in May. Oh, I see what you're saying. Yeah, the SCL wallet. But we'll get into that later on for you guys. All right, so let me turn it on over to Ms. Casa to handle the Q&A, and thank you guys for being here tonight. We're keeping the stream open for those of you on Facebook to see what us VIP have access to. So Ms. Casa, the floor is all yours.
Thank you. Can you guys hear me okay?
Yes, we can.
All right. Okay, you guys, we only ask 3 things of you. The first one is please do not unmute your mic until you are called upon. The second one is we do ask for only 2 questions unless we have time for more. And the third one is there are no silly questions. So please, whatever questions you have or whatever's on your mind, please raise your hand and let us know. Mr. Calvin, I see you. The floor is all yours, sir.
Okay, can you hear me now?
Yes, sir.
Okay, thank you. I just wanted to ask the doctor, do you have any instructional videos or anything, how we can get the PI method and learn it?
Well, let's see. I don't have any instructional information at this point. I keep saying I do, but I got so much stuff I'm doing, and I'm back teaching. Not an excuse, just old age, I guess. For I know, I can't believe the day's over with. But for the pi cycle, both the top and pi cycle bottom indicators are free if you have a free account on TradingView. You can set up, Bitcoin versus US dollar chart, and then add the pi cycle indicator, both top and bottom, and that'll give it to you, whenever you look at it. And then when the indicator comes up, it'll actually provide I guess like a little indicator saying that it's reached the top or it's reached the bottom.
Okay, thank you very much.
You get free.
Okay, thank you.
You're welcome.
Thank you, Mr. Calvin. Okay, the beautiful Miss Patty Geis, the floor is all yours.
Thank you, Miss Beautiful Queen Casa. Professor and Brandon, this one day was fabulous because it was so cool that Professor Sistron, for many that may or may not know, so I'm sorry my lighting is being all weird. We've talked about the Bitcoin halving for a few different 5-day challenges, but now when it coincides with the lesson that Brandon is teaching us so that there's a better understanding of really what the halving entails, it really sinks in. I mean, I think I have 4 pages of notes. So this is going to be kind of difficult for me to have only 2 questions. So I got to pick, right? So one thing, Brandon, so you mentioned that we talked about it in Crypto Talk this morning, that some of the Bitcoin addresses that hadn't been moved ever have now been moved, and now they're starting to see the money moving around. Could that be a sign that Satoshi Nakamoto is moving those around? Or what's your thought process on that one? So that's my first question.
Well, let's answer the first one first.
Let's do the first
question. Yeah, the wallet belonging to Satoshi, and it's been monitored since the beginning. It's got more than 1 million Bitcoin in it, and it has never been touched. So they know, unless he's got other secret wallets, but what's happening is some of the other early wallets from those times, from 2010, 12, 13, that the Bitcoin has not been moved in 8 years, 9 years, 10 years, are starting to move. So these are the early, it could be early adopters, early programmers, or if Satoshi did have more wallets that we don't know about. I personally don't believe Satoshi's around anymore, but yeah, it's not him, but it is meaning that the early adopters are ready to make a move. And the reason why it's moving, you might say, well, if they had it on a wallet, why are they moving it to other wallets? Those early wallets aren't like the free features and things that we have today. A lot of those are what's called paper wallets. Back in the day, it was just, you just had an address that all the Bitcoin was held on, not really any functionality. So they got to take those private keys or take those wallets and move it to an exchange, a MetaMask or a Trust or Crypto.com or Uphold or Coinbase or Binance, so that they can trade on it, sell on it. A lot of them are doing what's called, they're playing the tether game, where they saw, dang, Bitcoin got this high already. They already predict when the halving happens that the market's got to come down a little bit more. So they're probably going to tether their coins and wait for it to hit down and then buy back in again. So there's many different reasons, but that just tells us something's about to go down. That's why they're moving their coins.
Something big this time.
Mm-hmm.
Okay, question 1. Question 2. With the Bitcoin halving, so I don't recall that being written or disclosed in the white paper.
Yes.
I don't remember them talking about the halving every 4 years. And so I looked it up, and it says that the halving is not in there, is actually not in there.
They don't call it. They don't call
They
it.
talk about, well, they have it written in the code.
Mm-hmm.
So the white paper talks about the total supply, but it doesn't talk about the halving. So my question is, why is that? And you had mentioned that because of inflation, but with inflation being less than 2%, that doesn't make sense. So why would that, I mean, that just doesn't make sense. So that's why I had a question.
He in the white paper, he talks about the definition of it, the protocol on how it's supposed to work so that it is considered hard money, like gold. So it doesn't have to say it's a halving event taking place. It says written in the code is the ability to decrease the supply of available Bitcoin, which is going to make it more valuable over time. So we're going to have another time where I do a live reading of the Bitcoin white paper. And when we get to that section, I will break it. All right, here it is. This is what he's talking about. It's written in the code to operate opposite of what fiat money does, where fiat, they just print more money, where in Bitcoin, there's a limited supply and only a certain, instead of releasing all 21 million up front, that the last one will be mined by the year 2140. So it's written in that on how the system's supposed to take place, but it doesn't say every 4 years because it's not every 4 years. As time speeds up, it's actually going to get shorter and shorter and shorter. Like the 2028 halving will probably happen in February or if not sooner, based on how many miners are in the system with all that power. And this is why Elon Musk doesn't like it, because that creates more energy. The more miners, we've got more than 1 million plus miners out there, but in the early days, there wasn't that many. You know, you had thousands. So as more energy is put into the system, more mining is taking place, and the faster it happens.
Gotcha. All right. Thank you for that.
I like what Herschel said there. There wasn't an actual name for it. They added a name to that later on, but it is in the white paper. They just don't name it as Bitcoin halving.
Miss Patty Geis, as always, thank you for fantastic questions. You got me and my mom back here talking, so thank you for your questions. And Mr. Ivey, thank you so much for that answer. Okay, so I have a couple of questions. We have some new friends that are here on the Facebook side, and so I have a couple of questions from them. And no question is a silly question, so I told them I would ask them exactly how it's being asked. Okay, so let's just say they're very interested in what you're talking about, very excited, but a little scared at the same time. So one of the questions was this. One of my friends thought, man, I need $5,000 to get into Bitcoin. Can you please tell us, if you are new, how much does it actually take for you to be able to buy some Bitcoin?
A penny?
Okay, well, what do you mean by that?
Here's what I mean. There is no entry point when it comes to buying Bitcoin. You don't have to, people think I can't get Bitcoin, it's too expensive. You don't have to buy a whole Bitcoin. As what I did in this lesson tonight, I showed that the decibels, 0.00000 all the way 8-9 decimals is what Satoshis. You can buy a piece of a Bitcoin. When I started my journey, the very first time I bought Bitcoin, I bought 3 of them for $640, sold them for $870. When I came back around a year later, I started my crypto journey with $30. 30. And I flipped that $30 into 6 figures and then 7 figures. So it doesn't matter how much money you have. If you've got the knowledge and education, you know what to do with it. If you're dollar cost averaging, like I have my mom's never going to understand all this stuff, this technical stuff. But she is a Bitcoin investor because every single month she has a set budget where she's purchasing Bitcoin like clockwork, regardless of the price. You can have your own budget, whether it's $50 a month, $50 a week, 500 a month. I got to check. I had another girl. She was doing about 2,000 a month, and that was 2 years ago. I got to see if she's still doing that. But it doesn't matter. You might have 10,000. El Salvador is doing 1 Bitcoin a month that they're purchasing. BlackRock is doing 5,000 Bitcoin a day. You know, so it doesn't matter. It's okay to be scared, but I would be more scared that I'm putting money in my savings account from my direct deposit from my check every month than buying Bitcoin, because Bitcoin has a more than a decade long history of its process, the best performing asset of the past decade period. So I feel more comfortable buying Bitcoin than putting money in my savings account.
Okay, so if I have only $10, I can get Bitcoin.
Yeah, you can buy $10 worth of Bitcoin.
Okay, that's perfect. Thank you.
So
Okay.
those of you, think about this. I did an interview with the Get Fit mining team on Saturday. If you bought $10 worth of GFAM on Saturday, it's worth like $40 today.
Very true. Thank you. Okay, one more question. Like I said, the friends that I have here, they're a little nervous. So what would your advice be to those that are new but willing to learn?
I cannot give you my advice. I can give you my suggestion. If you're brand new and you want to learn, you want to join a community. See, when I first got started, I wanted to learn. There was nobody out there to teach me about crypto. I knew people who made millions, and I asked them, and they didn't understand it. I said, how are you investing in something you don't understand? And their response was, Bitcoin just keeps going up. And I knew that that's not possible. There's going to be times it goes down as well. So my teacher was YouTube, and I do not suggest you do that. It's even worse today than when I was doing it. I spent 6 months going through Google and YouTube, soaking up as much Bitcoin and crypto information as I can. And I realized later that at least 50% of the information that I was getting was wrong information or outdated information that was no longer relevant. So I created crypto education. So that's why we created ILCA. We created this community. We've got streaming videos that you can watch on your own time. I remember when Marnita first approached me about this, and she was asking questions and she wanted to learn. I said, all right, watch these videos. At the time, I only had 3 courses, 45 videos: Bitcoin 101, Crypto Advanced, How to Trade Bitcoin and Crypto. And I told her to watch. I thought it was going to take her maybe 3 months, 6 months. She went through them in the whole weekend. I said, okay, what's next? That's how hungry she was for this knowledge. So no matter your background, if you're working 1, 2 jobs, you've got kids, you stay at home, you're a single parent, you can fit this education in your time and just start from the beginning. And as you soak this in, you're going to feel more confident about what you're doing, and then you'll be ready to engage with whatever resources you currently have at the time. So join our community, ILCA. That's where you begin.
Fantastic. Thank you so much for that. Okay, I see you, Mr. Long. The floor is all yours.
Hello, I have a question. I know we're talking about Bitcoin halving, but is there any other blockchain that is also having a halving or halving style? And is it correlated with Bitcoin's halving?
Great question. Well, there's a lot of different projects out there that have their own programming. Some don't have any halving, others have halvings, and it's programmed differently. Now, I need to, yeah, that's a good question. I need to go back. It's been years because I used to document what other blockchains out there do have halvings. Mr. Crow probably off the top of his head knows a lot more than I do on the other blockchains, but every blockchain is different and it's not correlated to Bitcoin. So Bitcoin Cash has their own, that is kind of correlated, Bitcoin SV, but others like Litecoin has a halving event. Ripple does not have a halving because a lot of these tokens and projects the tokens are already pre-mined. They already know the number, and all they have to do is release them like Ripple does. They just have a time release of Bitcoin, so there's no mining that's actually taking place. But yeah, every project has their own. So when you read their white papers, the white papers will tell you what their tokenomics is and when tokens are going to be released and how. But Bitcoin is very unique.
Thank you.
No problem.
Great question, Mr. Long. Thank you so much for that. Okay, I see you, Mr. Crow. The floor is all yours.
Evening. Just want to throw a monkey wrench in everything with a question. We're talking, I know this is Bitcoin halving week, and we're talking about what Bitcoin is doing and bringing, awareness to it. However, one of Marnita's questions made me want to ask this question in relation to how much it would cost to actually buy some Bitcoin or some Satoshis, which are fractions of a Bitcoin. And I know Dr. Sistrunk, historically, in some of his other presentations, also states his fondness for Ethereum. There are a number of coins that are out there, Bitcoin being the first, so naturally we talk about it the most. But history also tells us, with the halving cycle, that altcoins also follow suit with the rise and fall in the market. So my question is for Dr. Sistrunk and or Brandon, both. If you were a new person today in the crypto space, would you focus on buying Bitcoin? Or would you say, wait a minute, the percentage gain for some of the altcoins that we know will follow may be a better space for us to play in to see more profits sooner, but track Bitcoin for when that occurs? So the same charting and the time factors for Bitcoin, there are other coins that have been around for at least one cycle, some two, that have a chart that follows a pattern as well. I'll shut up.
Yes,
Professor, you
you're
wanna go
exactly
first?
right. Yep, you're exactly right. That's why I follow Bitcoin. And when I first started, I invested in Bitcoin. But I made the same decision. Again, like Brandon said, this is not investment advice. This is just what I did.
Right.
I came to the conclusion that you did, which is Bitcoin is moving pretty quickly, but Ethereum is younger, has more long-term demand, and is moving faster than Bitcoin, but the price follows what Bitcoin halving and what the Bitcoin price follows. It delays the growth, the annual growth rate for Ethereum is really higher than Bitcoin, but it tracks behind it, if you get what I'm saying. Like Bitcoin, I have a spreadsheet where I keep the daily price of Bitcoin and Ethereum. And over the years, I've noticed that when Bitcoin reaches its top, it then for the next 4 weeks, Ethereum takes off. And then it reaches its top. So my theory was, why don't I run with Bitcoin into a certain point and then flip it to Ethereum and run some more? And that's why you heard me talk about Solana. Some of these other meme coins and stuff, I'm not going to get into that. But Solana has a blockchain, and most of your big name companies are using it. So I'm like, well, if Disney's using it and all these people are using it, there must be something to it. But it's newer and its growth potential is much higher. And what I think it's going to do is you go Bitcoin, and then you go Ethereum runs, and then Solana will run. And Solana will probably have an overall higher return than Ethereum, which will have a higher return than Bitcoin. But now, wait a minute. Bitcoin will still have a high return now. But you're exactly right. I agree with you 100%.
All right. I want to say it like this. And for all new people, let's listen to what I'm going to say very, very carefully. I remember when I first got into the crypto space, we all hear about Bitcoin for the first time, and then we're all of a sudden exposed because there's a lot of projects out there that are launching their own tokens, and you hear stories of people getting rich off of these meme coins. And a lot of people's first exposure to crypto is through a project, through a token that they've got to get on a meme through Uniswap or PancakeSwap, and they've never even bought Bitcoin before. First, you've got to know your resources. You have limited resources, so know what your resources are. The safest place, if you're talking about wanting to be long-term, is going to be Bitcoin, period. Then when you go into, now what other coins, Brandon, can I get that's going to get me a better return? Because a lot of them are. The entire market follows Bitcoin. It's like the rising tide. When Bitcoin rises up, all tokens rise with it, regardless of how good they are, whether they're legitimate or not. They rise with it. Whether or not they're able to stay or have longevity will be determined on their real world use case. If the rest is just going to fall out. There's going to be a crypto storm that's going to take place that, in my opinion, is going to wipe out 90% of all the altcoins in the future. Only 500 to 1,000 will be left. So if you want to dabble into using your limited resources to be able to, I call it, catch up to the early people who got into Bitcoin early, say, how can I catch up to the gains they got? Because I'm not going to do it if I'm just getting Bitcoin. Well, what about Ethereum? You know, if Bitcoin goes from 70,000 to 140,000, everybody's going to lose their mind, but that just doubled. Ethereum can end up going from 3,000 to 20,000. That's a much bigger return during the same time period. So if I had put $5,000 on Bitcoin, you know, I'd make it's another 5,000. However, if I had put 5,000 on Ethereum, it going to 20,000 a coin, my return is much bigger. And then there's even other altcoins that you might not have heard from, where you can flip 5,000 into $500,000 because Bitcoin rises. So first, education. Get yourself educated first. That way you will know how to search and see if a token is right. And I say that for this. In my early days, there was this YouTuber, I even forgot his name. And this guy was supposed to be the guy. Everybody was following this guy because he had made so much money in Bitcoin. Then he started talking about what he was about to do with the altcoins. And he was running his mouth about how he's got this diverse portfolio of all these altcoins. Now, I don't mean to laugh about this, but he discredited himself immediately overnight when he released the list of the altcoins that he had got in on to diversify, that he thought was going to go the moon like Bitcoin. And these were what we call, you know, excuse my language, shit coins. They were no real value to them, nothing. It was only hype, pump and dump. And he ended up losing all his money. He put 90% of his Bitcoin into these altcoins to flip it and lost all of it because he chose the wrong coins. The theory was sound, but he chose poorly. So for an uneducated person that wants to try to diversify themselves, I would say if you're going to do that, look into the top 10 coins that's already out right now. The coins that have, like Herschel said, have already gone through one or two previous Bitcoin cycles. And you can look at their history and see that after the Bitcoin halving happened and Bitcoin went up, they also went up. And they went through at least 1 to 2 cycles already. Those are good to be a part of. But then when you get into a community like us, we find projects and tokens that nobody knows about yet. and that we get in on them early and have a huge profit like we just did with the GFAM token in the last 2 days, up 100+% in 2 days. The Dark Fusion project with the VRX token that nobody knows about yet that we have access to. When we're in crypto talk, we hear about new projects coming up and our ability to get these tokens. And next thing you know, like one I missed because of my wife's birthday. What was that, Leonard? That BHFT or something token that I would have flipped $1,000 into 200 something thousand in a couple of months. BHCT. We found. But everybody wants to be on the next Shiba Inu. Well, if you're not educated, you don't know how to find the next Shiba Inu. But what if we had a service in place where you can pay to have professionals do the research for you? That's going to do free airdrops on tokens that they've researched that's going to be for you. So there's things in place that you can do if you're a part of the right community that can put you in the right position. And that's where we are at right now. So the great question, Mr. Crow. Thank you for that one. And that certainly is possible because the real investors own more Ethereum than they do Bitcoin. There's a reason for that. Just saying. All right, back to you, Ms. Casa.
Okay, was there anyone else? Okay, well then back to you, Mr. Ivey. I was gonna call you Mr. Casa, Mr. Ivey.
Well, there was a question. How can I buy Bitcoin if you're in the Caribbean? Well, again, I don't know the jurisdictions of every single market that you're in. There may be restrictions on what you can do with your bank or how you buy it, but there are multiple ways that you can get your hands on Bitcoin by either going through a direct exchange. You can use a credit card. You can use, in the United States, Cash App. You can use PayPal. You can use over the counter. There's many different ways or decentralized exchanges. So it just comes on your jurisdiction. In America, I always tell people, if you're brand new, you always start with a Coinbase account. I don't like Coinbase long-term, but as for a beginner, they are the most vetted crypto exchange in America. So you're not at risk of losing your stuff. So you start there first, and then as you get educated, you'll know how to move your tokens off of Coinbase onto other wallets. And man, I got to think about it. I don't remember the last time I ever bought Bitcoin. I earn Bitcoin and then I swap and I flip. I haven't bought Bitcoin in a very long time. But yeah, are you kidding me? It would 295. My wife's birthday messed me up because I didn't do what I would have normally done, and I missed out on that. But anyways, that's an inside joke there. We in our crypto talk group. But anyways, yeah, anybody can get their hands on Bitcoin no matter where you are, anywhere in the world. Mr. Long, you had something you wanted to say there?
I was going to remind everybody, well, some are going to be reminded, others that don't know. If you search on your phone under maps for Bitcoin ATM machines, you can buy it from the Bitcoin ATM machines. I've never done it myself, so I don't know exactly how that's going to work. But, if you're out traveling and you see a Bitcoin machine, especially if you're in Vegas, because there's a bunch there, you can buy your Bitcoin through them. And I think some places you get a card with that information on there.
That's right. But again, you got to know your jurisdiction. I don't know every jurisdiction, and the laws change. What was good last month might be different this month based on your region. I know in the United States right now, there's a concerted effort. I don't know what's going on in Texas with y'all politicians out there. They are doing their damnedest to try to curb any type of crypto type stuff, whether it's a business or ownership or whatever. I saw a report, I think Marnita had posted a week ago or so ago about something new that Texas is trying to do. But eventually this will be open to everybody. It'll be much easier to get to participate in. All right, so anybody else? All right, everybody, that is it. Thank you for our first night of this is the first time I ever did a 5-day challenge where we didn't kick it off with what is the blockchain. So this is a little different, a little bit more advanced. Tomorrow night, we're going to be doing Bitcoin halving again. Our special panelist will be Mr. Herschel Crow, and we're going to be talking about what is the impact of Bitcoin halving for investors and some strategies. Wednesday night, we have a special guest, which will be James R. Davis. Wait a minute, do I have that mixed up? Herschel, are you tomorrow night or Wednesday? I don't remember. I think I had you tomorrow. Yeah, I have Herschel tomorrow. James Davis on Wednesday. Then on Thursday we have Mr. Prelvis Lofties, and then on Friday we have Lanu. So that's the rollout for the rest of this week. And every night we have a different topic inside of the Bitcoin halving. Here's another thing, guys. These Bitcoin halving courses I've created, I haven't put up for sale. So there's no way you can get your hands on this unless you're in this 5-day challenge. I haven't put them up for sale yet, and I'm gonna ultimately have probably 15 of them and add them to the courses for those of you who are diamond members doing our $99 a month. But right now, the only way you can see these courses is in the 5-day challenge. So with that, thank you guys for being here tonight. Thank you, Ms. Casa, for hosting. Thank you, Professor Sistrom, for staying up late out there on the East Coast and being with us. I know you got a lot to do and classes to teach tomorrow. So we love having you. We definitely want to have you back next month, because now that's really going to be big. I got to figure out, how do I want to do next month? That's right at the halving time. We might have to do this again. So with that, thank you guys. I'll see you guys in the inner circle on Crypto Talk tomorrow morning. And we'll be back tomorrow night again at 9 p.m. Eastern, 6 p.m. Pacific for our next 5-day challenge. Bitcoin Brandon out. Bye-bye.